All right. Hello, everybody. Welcome back to the channel. We are here on a Sunday. I'm here with a very special guest, someone whose career I've been stalking for the past 5 or 6 years because it's given me a little bit of a framework on how to build my own career. Mr. Howard Lindzon, the founder of Stocktwits. Thank you for being here.
That's it. My claim to fame is I have 2 kids that I've successfully launched out of my house, but you can start with Stocktwits, sure.
And you got kids, and you well, you've done a lot of things.
I don't just have kids. They're almost off the payroll and good kids.
How old are they? 18? They're just getting out?
25 and 26.
Do they okay, so real quick, do they care about the stock market as much as you or no?
No. My daughter is super interested in investing and does definitely wants to do what I do, but she's in New York working, and then my son thinks I do a pretty good job for him. He thinks, why should he do it if I do so well? He goes, your fees are a little high, but please keep doing what you're doing.
I love it. I love it. Okay, so we have a lot to get into. We have a lot to dive into. First of all, Howard, thank you for taking the time for this, and shout out to Rom for connecting us. Really, really appreciate that. I want to start here. I want to start with this blog post, if you may remember, from August 24th, 2006, when you announced to the world that Wallstrip.com was coming soon. Wallstrip ended up becoming one of the first video podcasts on the internet at the time to talk about the stock market and the world of investing. And then eventually it got so popular, you guys ended up selling to CBS. So my first question is, walk me through what was your mindset at 2006? How old were you? Did you achieve some success in life? Like, why did you decide video online media in investing was the future of your career at that time?
Good question. All right. Let's dig in. So 2006, Web 2 was really exploding. No one fully believed, much like AI, it was like the same type of moment, right? Yep. We had browser. Well, first, we were coming out of a serious tech recession. So what's different about then versus now is skepticism was very high and valuations were very low, and there weren't like seed investors, right? Like Fred Wilson, Union Square was a seed investor. There was no, there was just no like angel list.
There was no Andreessen Horowitz walking around.
There was like, my mentors were probably like Ed Sims, who's great. He was writing a blog before he was Bold Start. There was Fred Wilson. There was Brad Feld. There was David Cowan who was writing, and there was a blog roll. And I was a hedge fund manager, disgruntled. Hadn't really given up yet on the idea of trying to beat the market, but definitely it was not a fulfilling career trying to beat the S&P 500. And so very unfulfilling. And I was old, so I was 40, so I'm 58 now. So I was 2006, 18 years ago. So I was 40.
So you had already achieved some professional, parts of your life. You could call it success, or at least
I had some early wins that allowed me the luxury to daydream about Web 2. And I was in the middle of what should have been a home run. I had invested in a company called golfnow.com, which was kind of open table for golf. And at the time, Golf Now was this little company with a little bit of VC money or seed money from us. And they were basically an aggregator of tee times around the country.
Right.
And I would argue with the CEO. I had too much money in it relative to my net worth as a seed investment. So I was just super attached to the company and meddling, as I've been known to do, and driving each other nuts, the founder and myself, mainly because I had put too much, it was too much of my portfolio in a private company while I was doing my day job. And Golf Now had solved a real problem. People were coming to the website to book tee times. So they had everything that you wanted. Customers were coming, they were telling their friends, they were doing commerce, they were making money, the golf courses were happy, but they weren't like keeping the customers there. So and so Web 2 comes along, and I'm like, see YouTube and Rever and Dailymotion, et cetera, and all these Web 2 businesses. And I'm like, why don't we build like a social part of this thing? Let people meet other people in the foursome, create like a media business around this because we already had the transaction part. So we
Right.
argued over this left and right. And to prove my point, I said, I'm going to build CNBC on YouTube. At the time, I hated CNBC. I was this disgruntled, as I said, hedge fund guy, listening to nincompoops wax poetic about whatever they were. Oh, real estate at this point in the stock market.
Yeah, you called Citibank a shitty business live on TV. I heard you say that.
I called them Shitty Bank. I got bleeped and kicked off the network. I just said, why are we talking about Citibank when we should be talking about tech? But back on point, the idea was with Web 2 was I can go with YouTube and build a 24-hour CNBC cobbled together with a bunch of people that I find on the web. Right. And that was the idea. I cold emailed Fred Wilson. I kind of knew him from being in his community, and he loved the idea. Little did I know that he had invested in TheStreet.com way back when. It was Jim Cramer's first backer.
Yeah.
And very focused on fintech and very much a media person. And he gave me a first check, introduced me to a bunch of other his friends, Mark Pincus, Brad Feld, Roger Ehrenberg. Raised $600,000, and the idea was Wallstrip, which was to do a 3 to 5 minute daily web show on all the channels. YouTube hadn't yet won the war. Yeah. It was just the very beginning. And as luck would have it, right place, right time, pretty good show, pretty good cast, and CBS came along and acquired it before we really dug in. We were about 8 months into the company, and CBS acquired it.
Did CBS give a nice premium on that?
Well, I mean, yeah, not in terms of like what you see today, but considering we had raised $600,000 and sold it for close to 10 million, I would say, wow, in 8 months, that's a pretty good return on capital. So and everybody got jobs and kumbaya and but we didn't, the industry was so nascent, right? There was no monetizing YouTube yet. We were creating ads and like doing all that, but it was very heavy lifting. And Web 2 is very much, as our firm name, Social Leverage. Content is very much not, of course you can get viral, but content is very much not scalable.
Yeah.
Right. So it was like, I had this idea. Yes, I wanted to create a 24-hour business channel, but CBS made me an insane offer that I couldn't refuse. And, the glory of selling to Les Moonves and CBS seemed really cool. So off we went to work at CBS. How
long did you guys operate at CBS?
They wanted to fire me day 2. I said something day 1 that pissed off Les Moonves, and it's a whole long story, but I think I was persona non grata by day 2 at CBS. I was the Clarence Beeks of CBS by day 2.
So you built a Web 2 product, and then immediately you sold it to like a traditional media entity, and I think you kind of realized.
Yeah. I'm the asshole that did that, yes. Huh. Is that what you're implying? Yes. So CBS, Quincy Smith, they had CBS Interactive, and Quincy was a very acquisitive. Again, a lot of this happens. The same thing will happen going forward. Sometimes you just get the right thing at the right time in the right place, and you have the right cap table, and you have the right investors. And this goes to the art of putting a deal together, which has kind of been lost the last 10 years. But there was very much a craft around setting up companies in 2006, right? You had this explosion. You still didn't have the iPhone. You still didn't have AWS, but you still didn't have really a mobile web. It was still very much desktop. But yet, so you didn't quite know what was coming, much like AI. You had like the hints of what's coming. So it was bird in the hand type thing, right? Like, do I go raise $5-10 million to create more shows, or do we do that now? And that was part of that optionality of the craft of investing back then. I think we raised money at like a 100,000 valuation or 200,000 valuation. So I'm saying, think about today. There's unicorns before there's a product. So things are a little different.
Okay, so was that your first? You said you had wins before that, but was that like the biggest win for you at 40? Or
no, at the same time, Golf Now was happening, and Comcast acquired them for about $50 million.
Wow.
Yeah. So, and then before that, in the 90s, about an hour before the internet started, I had a fellow, a really good friend that I backed pre-internet in a product called The Grip. We made it to the QVC Hall of Fame and did 40 million, 50 million in sales of a consumer product. So we had seen the end zone in terms of, but I'd never really been participating in the internet until 2006. 2006 was when the internet started making sense to me personally.
Right. Okay. So when does social leverage start?
Right around then, 08 happens. Financial leverage kind of brings down the world.
Mm-hmm.
I think much like Tiger in 21 and SoftBank in 2016. I think when SoftBank imploded with WeWork, I think a lot of smart people, or a lot of people who had read textbooks like myself, said, well, this is the fucking top. Like, I mean, the cat's out of the bag. This is really stupid. The Saudis are just, it's stupid money. And then what happened for the next 5 years is you had 10 SoftBanks. In 2006, there was all those warnings about mortgages, but it took until 2008 for everything to really kick into gear. And really what we learned was all these Excel spreadsheets. The world was built on Excel with like a formula, and all these spreadsheets that everybody just had assumptions about where interest rates would be and how to package products imploded. And everybody was holding the same asset, and it was leveraged pretty much, and almost blew up the world. So my idea was social leverage was the name of our firm was the opposite of financial leverage, meaning you continue to compound your network and speed things up. So in 2007, I think when we started Social Leverage to write checks, the whole idea of the brand was, hey man, we're looking for things that can scale. I'm not a tech person, so I didn't really understand what network effects means, but I had mentors like Fred Wilson and Brad Feld who did, right. And I was just fast following their thoughts on the process.
Okay, so and from that perspective, in 2008, the entire world is collapsing. You didn't feel any pressure starting a VC fund, or did you think that was the exact best time to start backing companies?
No, I didn't. We were just writing personal checks, Tom and I. I didn't have endless capital. But we were back then. You write 25, 50K checks. You ran out of money pretty fast. So then, right. Then you realize, oh wait, you're helping companies that even if they were good ideas. I remember flying around with 6 or 7 of our companies: Buddy Media, Ticketfly, TubeMogul, and including my own company, Stocktwits, which I was starting. We were like, even though they were great founders and we had great ideas and revenue and like real businesses, we were like floundering. Right. Because there was no capital and there was still no angel list. There was still no real iPhone was just coming out. We were still on our Blackberries for the most part. So I don't think people remember that like 08 through 2010, before the angel list Uber phenomenon, Airbnb, there was a really dark period of fundraising from 2008 to 2010. So even though social networks had taken off and YouTube had been acquired by Google, there still wasn't Instagram. There still wasn't really mobile apps, and there was still like, fuck, why invest in a startup? I can buy, Amazon down 70%. Right. So it was a seriously bad time.
Okay, so let's get into what I introduced you as, which is the founder of Stocktwits. Mm-hmm. Twitter. First of all, did you angel invest in Twitter?
No, I was presented. So Twitter made no sense to me. I started out using Twitter because Fred offered me to invest in Fred Wilson. Right. and it was a 20 million post-money valuation, and understanding what I thought value before I understood what network effects were. I thought 20 million was, I remember saying to Fred, I'm like, how is this going to be 20 times my money? Like, under what math? This is how little I understood about social leverage at the time. Forget the fact that they had traction. There was a fail whale. There was but there was no iPhone. Yeah. There was, still BlackBerry. And so I was tweeting about nonsensical things like where I was going to the bath. And most of the people on Twitter at the time were VCs or Silicon Valley people. So I was just a silly guy going, I went to the bathroom here and marking my spot, kind of marking my urine tour around the country. And VCs found it humorous. And then at one point when Twitter was really, during the crisis, I was like, why aren't we talking about stocks here? And I sent Fred a $RIMM, is this a buy? And Fred sent me back a BlackBerry saying, this is very genius. You should start a company. And that's where Stocktwits came up. And the idea was, I'm going to build
That was
Twitter.
the cash tag.
That was the cash tag. Yeah. So we came up with the cash tag, Chris Corvo and myself. And we were that was our way to parse Twitter's search so you could talk about stocks, because stocks already had a language. So I sent Fred probably the first contextual cash tag. And Fred immediately, as the genius that he is, said, this is genius. You should start a company. And I was like still at CBS. And I was like, Fred, this is like, why don't we just go to Jack and Ev and tell them to build Twitter, .finance.com. So Fred set up a kind of a meeting. They were like kumbaya, Arab Spring. I don't know. They were like not interested in anything. They were like, come use our API. I was a sucker in the room, obviously. Yeah. So they weren't interested in building verticals. It's a long history of incumbents not wanting to own, that end up closing, but still don't own the verticals. Really stupid decision-making long-term. And Fred was even confounded. Fred was like, I don't get it. They should, own this vertical, just like Yahoo Finance, just like, but they didn't. And so I started Stocktwits.
Wow.
So
Stocktwits almost became inside of Twitter. Yeah, it became.
I built it for Twitter.
Right.
I didn't want to. I was working at CBS, so I didn't want to start a company. And I'm not a tech person, so I don't know how to code. I'm an idea person. And here we are 17 years later, and Stocktwits is doing very well. I'm back as CEO the last 4 or 5 months, and growing, very much excited about, this, what I call the degenerate and speculative economy that we're in.
Okay, so when you started Stocktwits, I want you to walk me through how did that grow? Because you said you didn't really have an understanding of network effects. Did you go to Twitter and just tweet out a bunch, be like, "Hey guys, come here, this is cooler"? Yeah. Or like, how did that get the initial millions of users?
Yeah, I mean, just like you would think. Like, definitely wasn't as good as like Mark Pincus, who understood how to hack to grow Zynga. But everybody was doing the same playbook, right? There was this ARB that was available to entrepreneurs because Twitter didn't know how to monetize or didn't care. The dick bar hadn't been invented yet, per se. The Facebook hadn't become the evil company that it had, right? LinkedIn, nobody had evil walled gardens yet. There were still like the Fred Wilsons of the world. Keep it open. Like, this is a protocol. And I believe people like Fred. They were right. So why not believe them? And but that was before VC. Like, there was VC, and it was very much limited to, after 1999, it was a different VC world, right? No one wanted to think about software, and no one wanted to, as Fred Wilson would say, be someone else's bitch. Don't build on someone's platform, is what Fred kind of said, right? Like, they're going to screw you, right? It's kind of like the scorpion story. Is like, why'd you bite me? Well, I'm a scorpion. So it's the same thing with platforms, right? They're eventually going to screw you. But kumbaya, 2007 to 2010, everybody was growing, and it was very organic because you could go to Twitter and just spam. And I don't even mean spam, like, be intentional about, hey, come on over to Stocktwits and use the cash tag, and the cash tag would link back to Stocktwits, and there was this traffic going both ways, right? We were helping Stocktwits by coming up with the cash tag. We were helping Twitter by coming up with the cash tag, and they were helping us because you could click on the link and come over to Stocktwits. Well, that all just, as you know, got shut down. So you had this incredible period of organic growth, right or wrong, where companies like Zynga and I can't remember all the games.
Farmville, all these little games.
All these games that were Buddy Media. We could all grow on the backs of YouTube, Twitter, LinkedIn, Facebook. And now those ARBs are pretty much perfectly priced, if not too expensive, right? To go buy the same traffic that Robinhood or Stocktwits or anybody could buy up until 2016 is now forever changed. And with ZERP gone maybe forever.
Okay, so that explains the initial growth. When did you feel, as the founder of the company, that you guys really had something and the user engagement was there and people were coming back and they were tweeting every single day on Stocktwits?
Never. We were never scale. So it was always a grind, right? It was not fun trying to build. Remember, the media was all enamored with unicorns and Twitter and Facebook. So the way the media works is, so it was very much a grind trying to differentiate yourself to users. So I would say none of it was, obviously in hindsight, it's enjoyable, but at the time it was really much a grind, as it's supposed to be. It was never fun. It was always like in Twitter's shadow or in somebody's shadow. And we were always trying to like figure out how to grow organically, knowing that we were going to get cut off.
Right.
Right. And so I think that helped us.
Why did you keep building
because
it if you knew that would be the case? Did you just feel like there was a need at the end of the day for this market?
And today proves it. Yes, there is a need. And sometimes you get lucky if you hang around the hoop enough, and AI will really help us. But yeah, there's a lot of people that talk about building 100-year companies. And they do that before they've raised their C round. I've gotten emails from founders saying road to the IPO after we funded them. I said, that's just not a good idea. How about not jinxing yourself? So you become a 20-year company by becoming a business.
Right.
And you become a 100-year company by becoming a 20-year profitable business.
Right.
So there's just been a lot of bad information. I blame everybody. You have to take responsibility for your own, but just a lot of really bad habits have been developed through ZERP, YC, being an engineer, all the gravitas that came with it, all the free media that came along with it, how we treated founders for 15 years that started companies. So we got to undo a lot of that stuff. But Stocktwits, I had domain experience. Like I was building a product that I wanted to use.
Yeah.
So it was always fun for me. I always felt I had an edge using Stocktwits. And so it wasn't like, the problem was it a VC business? And that's obviously a fundamental question. And for that, it's easy to blame my investors. I'm like, isn't it their job to, and again, I don't blame, I'm saying, but you got to look to the investors too. It's like, why did they send me out on this route?
Right.
Knowing, aren't they the smart people? Like, shouldn't they have said, Howard, this isn't a VC business?
Right.
And I think that's another lesson. Even though they're great venture capitalists, no one sat me down and said, I don't think this, I love you. I think you're smart. I think you should raise a little bit of money and you should bootstrap this. Now, I might not have liked that advice or followed that advice, but no one gave me that advice. From Fred Wilson on down, the mantra was, you're smart, you should do this. And shame on me for believing that at some level. Now, flash forward to today, I'm CEO and we've got a business and et cetera, and but I think it's a responsibility that has been neglected, which is it's up to investors to just do the work and have domain experience to really give the founder, hey man, maybe your family should fund this, or maybe you should really just build a small business. But anyways, that's the era. That was the era. And of sound mind, I took the capital and I'm hustling to make sure we have a great return of capital still.
So the VCs that invested 17 years ago, are they emailing you saying, hey, where's my return? Or are they
have little dolls that they poke, they poke of me. and they go, and sometimes I go, oh, my back. And I just know it's Tony Conrad or Brad Feld.
But do they care? Do they care that much? I mean, they have a portfolio of bets at the end of the day, Stocktwits maybe a couple million for them or something.
These are very philosophical questions. Venture capitalists, I can only go by myself, and I'm not really a venture capitalist. I'm very passive aggressive. Right? Anybody who's worked with me, I think, can appreciate that. I lead with that. I'm like, I like to win.
Yeah.
Okay. And I also like to return the money of the people that gave me money, which are my LPs and myself. So if you're not passive aggressive, you're just lying or a bad VC. So now, of course, there's I've seen the what you call to the rule, the exceptions to the rule. There's truly professionals, right? I've met a few, and of course I keep going back to Roger Ehrenberg, Fred Wilson, Brad Feld, who are truly not, or hide their passive aggressiveness better than others, and know that they're going to lose money, right? And know that there's only really one bad thing a founder can do, which is fraud.
Yeah.
And if you don't commit fraud, I mean, even in my case, if you're not committing fraud, right? It's like running a bar. There's going to be slippage. Bartenders are going to steal, they're going to overpour, they're going to do this. There's slippage in any startup. But fraud is the unforgivable thing. So I would say, no, there's been no reason for my investors to be pissed. And in certain places along the way, they've said, hey, why don't you shut it down? Which was also offensive to me because no. The reason I did this is because I love what I'm doing. So that was the last thing I wanted to hear. So again, these are long, I think that people need to understand that these are like 10 to 15 year investments.
Well, that's the thing.
Not everything can flip it in a year like Wallstrip and sell it.
Well, YC has made it seem, as you said, that founders raise money and then within about 3 years, they either IPO or they get a Series F, but that's not how real businesses work.
That was a moment in time that, God bless the people involved, made a lot of money. I was involved with Techstars, and I know how hard it is to work. And I know the people at YC worked very hard, don't get me wrong. But the playbook is very much a moment in time.
Yeah.
Built for software and built for a network world and built for ZERP and built for when Facebook was not evil and built for when traffic on Twitter was free. Yeah. For these people to continually lie. And again, this is a true lie by YC and Paul Graham, right? They're no different than Harvard at this point, selling you a playbook that they have no history. They've been through one cycle.
Yeah.
Right. So again, God bless, everybody's selling their book, but I refuse to talk to YC companies, mostly always have, because I've been investing my whole life and I've seen these cycles. Right. And I can't, part of why I was so fascinated by financial markets is how upset I was with the people that were the spokesmen for the industry. And you know what? I learned a big lesson, right? Like, we've replaced Jim Cramer with 100 Jim Cramers. The internet didn't cure Jim Cramer. The internet accelerated the existence of 1,000 Jim Cramers. So it's like, be careful what you wish for or think you're doing.
Why did you leave as CEO and why did you come back recently?
I left in 2016-ish. I was exhausted. I mean, it wasn't scale. We were close to break even. We didn't need money. And I didn't know any, it was just, you had to build for iOS, you had to build for Android, you had to build I didn't know what I was doing as a product person.
Right.
And our portfolio was taking off and you can't do everything at once.
Yeah.
And we had done such an interesting job helping Robinhood and other startups grow on the Stocktwits ecosystem. I felt like it would be hard to screw up. And so I felt comfortable just leaving. And, I got to be honest, like Slack, I forget the year it came along. Let's call it 2015. I came from a world where you yelled at your employee. You could grab them by the shoulders and shake them, or, massage their shoulders and not get sued.
Yeah.
So I came from just a dark early world of business, and where what you thought was mistreatment was not mistreatment.
Right.
And so when 2015 came out and it was like Slack and all this new lingo and work from home, I was just like, you know what? Instead of punching everybody, I'm just too old to be a CEO, and I just replaced myself.
Why'd you come back? You think you learned a lot in these 8 years?
Yeah, I mean, I'm so old and tired that I can't stay mad for long. No, I mean, Stocktwits is in the area, I call it the degenerate economy, and the post GME world and the crypto world, and the fact that Twitter's moved so far away from the ball of finance, and there's no one doing what Stocktwits does, and it's never been more relevant. And product and the internet's just a lot easier than it was in terms of building than it was 10 years ago.
Right.
So combination of, I have a good vision for where the company should be. And then the most important thing is AI. In 2023, when did OpenAI come? I'm losing my
2022, end of 2022, they released GPT-3.
So I'm not a tech person, right? So I didn't see that come in. But knowing that Stocktwits has 17 years of unique customer data.
Yeah.
And reading about LLMs and understanding what Stocktwits had built. And I had like 6 or 7 product ideas that no one could have had except me, and no one was willing to listen to me. And combined with things that we were doing that I felt were wrong, I just kind of said it's time for me to come back in and convince the board to let me come back in and do what I wanted to do.
I like
I'm really having fun. I'm really having fun.
It's a rock star.
No one knows what I'm doing, and it's like so relevant. Like, and people are going to be super.
Well, you guys have the best data repository on the planet, I would imagine, in terms of financial news that's real time, which is the most. I mean, you go to GameStop on StockTwits, there's like 17,000 posts literally per second, right? You don't get.
So let me give you, So Nvidia was 9,000 the other day. We launched an earnings.
Wow.
We launched a new earnings page that we flashed to test for the Nvidia crowd on last week. We had 9,000 messages that day just on Nvidia with the dollar sign. We had 700 chat messages where we displayed the earnings call and had live. So we're going to triple down on what we're good at, which is real earnings. In a world where, just a little inside baseball, in a world where attention is everything, and even Netflix is worried about TikTok, what can Stocktwits win at? We're not going to win every day. Okay. But this is what Twitter got wrong from day one. The market is the biggest Super Bowl of all time. Super Bowl is once a year. The Tour de France is 3 weeks a year. They all take a back seat to the market, which is open from 9 to 4:30 p.m. every day.
Right.
And then crypto, that's before crypto, which is 24/7, 365. So the 2 biggest Super Bowls happen all day, every day in the financial markets, and they're getting bigger every year, right? Because with Robinhood and Coinbase, et cetera. So what a vertical that people have neglected and don't really even care about, right? Like, what has changed at CNBC? Absolutely nothing. What has changed at Bloomberg? Absolutely nothing. What's changed at Vanguard? Absolutely nothing. So we've had 18 years of like misdirection, right? And so I think the next 20 years of financial services and wealth management are going to be I think we had like kind of a head fake with Web 2, and I think AI and data and unique data sets are going to really be disruptive for alpha. Right. There's always alpha and there's always people capturing alpha, but I think the amount of alpha that will be not inside the terminal, and it will be at epic proportions over the next 20 years.
I mean, even one example, Faraday Future, we all kind of know it's a crappy company, went from 6 cents to $2. If you got on StockTwits when it was 15.
I didn't know that.
Oh, you didn't know that. Okay. So this is a meme stock that went up with GameStop, 6 cents to $2, 5,000% return in 5 days. If you got on there when it was 20 cents and you just read some of the alpha of like, hey, no, guys, like maybe there's a move here. I mean, you could have made some money, right? And you can only get that in a centralized network that is something like StockTwits.
Yeah. So I'm all for decentralized. It's not for me. I go into Discord, I want to slip my wrist.
Yes,
no offense to people who want to commit suicide, because Discord's worse than that. But I don't use Reddit. Okay. I'm not saying that's right or wrong. I don't
use Reddit either. I think it's too toxic.
Yeah. So, and I think the hedge funds are there now. Like, they're not going to let that happen again. So where is their alpha? Like, no one at scale is on Stocktwits. And I have 20,000 people that I trust for sentiment, and I know how to read the sentiment that no one else has. I'll take that all day. Does that make me want to trade more? Absolutely not. I'm just as much for indexing as I've ever been. But if I want to trade, I definitely want to go to Stocktwits first.
Okay.
So if it's good enough for me, I think that's going to be good enough for millions of people.
I 100% agree. I want to ask you this question before we get into Robinhood. What is your current take on the concept of a Finfluencer? So I started a market open show about 2 years ago, and every day live in the morning we had about 80 to 150 people come in. That has now grown to about 1,500 to 2,000 people every single morning, and then in the afternoon we do a market close. That's about 1,000 people. So for me, I look at that and I'm like, it gives me one of the greatest jobs in the world. I get to wake up in the morning. I get to talk about the things I care about, try to be as objective as possible, present unique perspectives, bring on guests to the show. And 1,500 people every morning start I'm their morning coffee. And that's really cool to me. And I think that can go into a lot of different places. I'm just one guy. I'm like this kind of one person media company. On Twitter and Stocktwits, there's thousands of accounts that are trying to be the, one person media CNBC versions of themselves, maybe in different verticals, maybe just for crypto, just AI, whatever it means. Is that a good thing? Are you a proponent of wanting someone like me to get 200,000 followers and build his own media company, or do you think that incentivizes way too many quote unquote Jim Cramers trying to have an opinion about stocks?
Well, it just is. I think what's great about Web 2 and YouTube and all the products that are coming now is it just is. So if this is your hammer, God bless, like hammer away. I would say I don't like the term. I just think in my business, trust is everything.
Yes.
Right.
Yep.
And so I could go on Stocktwits every day or on Twitter and promote a penny stock. Right. Or I could use the million emails that Stocktwits every day and go, you know what, promote my own projects.
Yep.
People do that. Believe me, I can name names, but I do name names every day, but it's not, you can't stop these people in the end. So all I can do is act as if, which is like, people trust me. The trust is so fragile. Right. And so I'd say stupid things all the time, but I try and keep my Finfluencer or whatever it is focused on large cap things that won't move the markets. Right. And I've made some mistakes saying things out loud that I probably, as soon as I say them, I wish I didn't say them. So I'm trying to get better at using the platform that I have to just talk about bigger ideas.
Right.
And not so much push what I own. In the private markets, I'm very much a cheerleader for the companies that I'm in, but in the public markets, I try and keep it to like $10 billion companies and above so that no one can say, Howard, you're this. Still going to be called that all the time. But I'm so bullish on Finfluence because there's experts that have access to alpha that you just can't get by watching CNBC. I've had CNBC off since 2008. I'm not missing anything. I've never had a Bloomberg. I don't read Wall Street Journal. I can index and be the market.
Right.
So I don't think you need all those tools. So I think if you're a Finfluencer and this is what you love doing and you think you can build an edge for yourself in a network, that's what these tools are for. So I'm all for it.
Yeah, I agree. And the trust thing is the most important part of this because I've seen so many people get a little bit of influence. They get some followers and they take the first NFT brand deal they can get. It's just like I've never done a sponsorship in 3 years, and I don't plan to.
We should, and I'm not saying you shouldn't. I do. It depends on the product.
Yeah.
Right. Like IBD is a product I use. It's ancient, but I use it. So
I went on their website the other day. I was like,
yeah, market search, but I love it. So I'm still old school workflow. So if it's a product I use, I'll promote the hell out of it. Right. I try not to get excited about stocks.
Yes.
But it's hard not to.
Yeah.
Okay. So I give people some leeway because it's hard not to talk your book. There's nothing inherently illegal about it. There's just shades of context that matter. But I am super bullish on alpha being everywhere because everybody has eyes, ears, nose, and feet. And to say that one person has Ackman's better than somebody else is stupid.
Yeah.
Yes, he has more capital to allocate than you, but that doesn't mean he's better than you.
Right. Yeah. And the only reason I haven't done a sponsorship is because I'm in the phase where I think it's time to build trust, for a couple of years, maybe even 5, 7 years before you say, hey guys, try this product, even if I really like it, because that's when the audience actually converts and it's reasonable for an advertiser to pay you the money. So for me, it's just like building trust. And I think a lot of people in the space, they get paid $20,000 to pump a meme coin and they give up everything they could have possibly built for that, which is the sad reality of the financial investing media.
Yeah. I don't like judging these people, but it's easy to spot it.
Right. Agreed.
Easy to spot.
Okay. So speaking of alpha, one company that I was talking about on my market open for the past 8 months now, when it was trading at cash, $7, Robinhood, put in 50 grand into some call options on that one. And we'll see how it plays out towards the end of the year. Hopefully, it works out really well. That stock's done very well. It's up 60% year to date, up 120% over the past year. You seeded these guys. What was it like? How did the pitch happen? When did you meet Vlad? Where did you guys get the confidence and conviction to say, okay, commission-free brokerages, that's the future?
Well, I never was bullish on commission-free. I did tell, the story was, I think in late 2013, They were kind of out of money. They had started a company called Kronos Research. I listened to the interview of Vlad and Baiju. Remember, they were co-CEOs and partners. So I definitely talked to Baiju more than Vlad in the early days when we were all really thinking about the product together in distribution, because it was fun. Like that was so really what happened in 2008 and 9, I would go around to E-Trade. I would go as Stocktwits. I would just take my feed and go to like E-Trade, Schwab, Trade King, Options Express, and say, why don't you guys like advertise on Stocktwits and direct the hashtag link to your brokerage?
Right.
They were like, and I wasted a lot of time and energy, but that was my job. That's what I thought my job was. You asked me why I quit. I wore myself out going and doing this Pied Piper pitch for years. And I just couldn't understand why. And what would happen if you're pitching a product person at Schwab that's making $150,000 a year, even if your product's a good idea, they're going to, what I would say, cock block your idea when they're talking to their management, because they're going to say, we could build that.
Yeah.
So I would leave the meeting and everybody be excited. And then that product manager would probably like, fuck that. Like, I'm not going to like lose my job and like integrate with Stocktwits. And my boss will say, why the hell do we need you? And then you also had all these advertising systems set up, like Schwab. Like the reason that Robinhood eventually became obvious to me is because how much money I knew publicly E-Trade and Schwab were spending to get a customer, right? I knew they spent $150 to get a customer. So I was like, why wouldn't you integrate with Stocktwits? Customer acquisition will be almost free.
Right.
So I spent years telling that story to the point where I was like so demoralized, right? And in 2010, I flew to Israel on a whim to see some pitches that I was invited to, and I met Yoni at eToro. He understood it just like I did. So in 2010, we invested in a company called eToro, which was well before Robinhood. So in 2010, Yoni and Ronan at eToro had this idea to do integrated streams and trading, and they were doing it offshore, right, in the Middle East and Europe. So they were the first to really, in a mobile way, do that. But for some reason, including my own lack of interest, I didn't want to be a broker. So Stocktwits didn't want to build a brokerage because I didn't want to be.
Why?
That's a lot of work. I'm not a tech guy, as I said. I definitely don't want to be governed by the SEC. Yeah. And at the time, from 2008 to 2010, every VC in the world thought that the better idea was to try and disrupt Vanguard, not E-Trade. So you got to understand how VCs were thinking too, right? No one talks about this, but VCs were like, why don't we disrupt Vanguard? They have trillions under management. And so for 3-4 years, it was like Betterment, Wealthfront. It was all these robo-advisors getting funded, which never made sense to me because they were never 10 times better. There was nothing broken about Vanguard. Just they were all chasing assets under management, but they didn't have a product that was 10 times better. And so I just didn't want to build a brokerage. eToro was not coming to in every board meeting in eToro, I'd be yelling at Yoni, come to America. Like, fuck, just come. And they were like, no, it's too hard and too expensive. And
they only stayed in Israel, eToro, or in the Middle East.
Well, no, they stayed in the Middle East and Europe and done amazing. It's a multi-billion-dollar company, and now they have a US operation, but they were young and they didn't want to do it. Along comes Robinhood. They had pivoted a few times, I think, based on what they had done, kind of a Stocktwits copycat.
They tried to do a Stocktwits thing in the beginning.
Yeah. And I remember going, well, why don't they just call me? This is a bad idea. I'm like, I'll show you all my wounds. Like, go ahead. And then so the company was called Kronos Research. They sent me a screenshot of what the app would look like. And it was beautiful, right? And I didn't have the nerve to start a brokerage. So I flew out to meet them in Silicon Valley somewhere. And the minute I met them, I really liked them. They weren't like the long hair that you see today. They were very much kind of on their last fumes. And they had a beautiful, I think Joe was a Facebook designer I met with him too. And they had designed a beautiful product. And I said, if you build it, they will come. It was kind of that moment. Yeah. I said, I don't want to build it. And I said, I definitely. And so they hadn't gotten SEC approval yet, and they still weren't even FINRA approved. So it was a very risky And I called my partner, Tom, and I said, Tom, this is it. This is $1 billion idea. This is before people said $1 billion ideas. I said, with Twitter's audience and Stocktwits' audience, the customer acquisition, my thesis was, if Schwab is paying $150 for a customer and Robinhood pays $0, right? Like, then if you get to 1 million customers, you're worth $150 million, right? That's just an ARB. And now I didn't predict it to get to 10 billion, but I'm saying, I said, we got at least a $300-400 million. This will easily, Stocktwits customers will all become Robinhood customers through an API integration. So to us, it was a no brainer, right? No, we didn't have a lot of money. So we invested $100,000. This was our first fund.
And that was pre-seed or Series A, or that was?
It was like a re-seed, because they had raised $1.5 million to do another company, Kronos.
Right.
And now they needed money to really start again on the brokerage side.
Right.
And that was the beginning of Robinhood. But, you know, at the beginning, it was under the name Kronos Research, and they had to do all the paperwork change, et cetera, raise more money. And I was introduced, and, you know, and then Stocktwits, the promoter that I am, I mean, once I saw this and we started promoting the hell out of it on Stocktwits and building a waiting list of tens of thousands of people, ended up with hundreds of thousands of people. But the product was a hit before it even launched, meaning there was an appetite. Even though people said indexing there was just that appetite, right? And
do you think it was commission-free trading that created the appetite?
Well, I mean, that's what I for sure got that wrong. I remember telling Baiju and Balad, you know, why don't you just charge it? Like, total VC of me. I was like, I think you should charge $1. Like, it just makes no sense to be free. Like, I don't know. You know, I'm like, this is so good that like people will pay it. And Baiju and Vlad, to their credit, looked at me and said, sure. And just lied and made sure they got their $100,000 from me. And then off they went doing what they do. Again, like, it would have worked if they were charging $1. That's how, but they didn't need to.
Yeah.
And it wasn't then about a business model. That was an era where no business, Uber had kind of been taking off, Airbnb. So there wasn't that worry about how am I going to have a business model, right? So it was the right place, right time, the right domain experience. Stocktwits was a huge help to them. When they rolled out, we had an API so you could swipe on Stocktwits and go right to Robinhood.
Wow.
So it's like our customers, just hundreds of thousands signed up. And so it's just a great, you know, couple of years of growth, you know, and it was free growth. It was basically free growth.
That 100,000, I mean, that turned out to be a good investment for you guys, I imagine.
Yeah. The long story short, that was that first fund was a great fund. We've had, and we rarely do this. So it's an interesting story about how this came out. They were starting to raise a Series A, and the VCs still didn't like this idea of brokerage. They were still like doubling down on this. 2014. I was talking to Vlad and Baiju, and they're like, "Hey, we want to raise a Series A." And I'm like, I'm going to write a term sheet. And I remember calling Fred Wilson. They wanted to raise $10 million, and I didn't have $10 million. So I called Fred Wilson. I go, what do you do? Like, I think this is like the one. And Fred goes, write a term sheet. I go, well, I don't have $10 million. And he goes, well, just give yourself 60 days to raise the money. I mean, you're Howard Lindzon. We'll put it, you'll do a single purpose vehicle, right? Like, before those were cool things.
SPV,
right? Yeah. So I said, really? And so I sent them on like July 4th, nervous as hell. I sent them a term sheet with like a 60 or 90 day close, right? I think it was put in 11 million at a 60 million valuation.
Knowing that we 60.
Okay,
60, gotcha.
And hoping that, nervous that they would accept, nervous that they wouldn't accept, whatever. Like, we were going to raise the money no matter what. It wasn't going to be a problem. It was just going to be stress, right? And feeling really good that like it was going to be a great investment. They did what they're supposed to do. They shopped that term sheet. And a few days later, there was an index term sheet that was a little bit better than ours with like a 9-day close. So he who has the capital wins.
Yeah.
What that did, though, with Baiju and Vlad, they did protect us and let us invest, close to $1 million in that round. So by writing that term sheet, we bought ourselves $1 million, which was a hell of an investment as well.
And I'm assuming you guys liquidated once Robinhood went public.
We liquidated along the way, as we tend to do. When founders sell, we sell. Again, when the company hit $1 billion in 2015 in the private markets, I had never seen that before. When you invested in an $8 million valuation and 18 months later,
that's 100x.
Yeah, it was big. And so when you see that and you've never seen it before,
yeah,
we sold some, right?
Yeah.
Right or wrong. But we sold some any chance we could. And then, yes, we returned the shares to our LPs. 6 months after the IPO, we sent the shares to the LPs.
Right. We got a couple comments here. PK says, just because this interview, Stocktwits got a new customer. Rodolfo says, there's no day I don't use Stocktwits, a mix of fun, opinions, and info. And we got a couple other people here saying they love using Stocktwits. Okay, so that was the early days of Robinhood. What is your opinion of Robinhood today? I mean, I think at $8, you got a little. You weren't the most bullish on the equity back.
Yeah. Okay, I'll give you the full take, because it's, again, like I told you, like with Golf Now or with Stocktwits, Twitter has given us the ability to be an armchair. I am corp dev to the world. I like to joke about that, right? Like, we are literally, including you, right? Like, we all are one tweet away from running every company in the free world.
Yeah.
Right? Elon Musk is living proof. Like, he has the capital. He's now running 90 companies. You know what I mean? Like, Jack ran 2 public companies. So anybody can be anything, which is fabulous. Okay. But so corp dev fascinates me in general. Twitter as a corp, and Twitter for a while was really fun because half the people that I was friends with on Twitter were corp dev at Salesforce or at CBS. Like, all the corp dev people are on Twitter. I mean, I don't know if they still are, but there was a period in the early 2010s where if you wanted to do a deal, you were on Twitter. Right? Like, it was really an unbelievable place to do business development. Okay, no longer, but it really was
for some extent. I made some deals, found some startups that I've invested in from Twitter. I mean, like, Twitter's there's alpha there,
But there was extreme alpha in 2010 to 2015. Like, I mean, we were all there. There was no war. There was no Trump. There was no Elon. He was busy building. You know what I mean? It was just software companies. Every employee was on there, and deals were getting done, and networks were being built. Okay. And there was still just that kind of more innocent jubilation of like, we're smart. Okay.
Right.
Anyways, it always bugged me that these Web 2 companies just they confused brand. They confused growth with brand, right? They confused ZERP and like free customer acquisition, that they were geniuses at brand. And I think we've all learned now with the failure of so many DTC companies and other companies, that brand is like I said about Finfluencer, it's very fragile, right? And momentum is very fragile. And so believing your own hype about like growth, and Chamath always has this, oh, I've solved the growth playbook, right? Listen, God bless, he's selling his shtick. Okay. No, Facebook was a miracle that had an algorithm that he hijacked to say he knew how it worked. Okay, that's funny. Good for him. But oh my God, like, think about how big a lie that is, right?
He should have used that growth playbook on all the SPACs that
he did for himself. But that was no growth playbook, because that was an old grift playbook. Okay. But that's besides the point. Everybody's entitled to do what they want in the market. You just got to be careful of breaking the law. The idea that all these Web 2 companies were not really respecting their growth, right? I heard Vlad on this interview, and he's way more respectful of like, oh my God, like more respectful of how hard it is and how lucky they are, right? Because there was just that arrogance in 2015 to 2020. Where money was free, valuations were free. And then, like, in the blink of an eye, man, there was like, as an investor, there was like risk of ruin in that, right? There was a weekend where VCs had to gather behind scenes, not me, and decide whether they were going to fund the balance sheet. And if you don't And so that was a wake-up call, hopefully, to a lot of people. And so I was nervous. Like when you go from like being rich to like being a villain, or being almost broke or losing all your money, that wakes you up. So I kind of just, that changed me because we had never seen everybody push the same button, at the same time. Right? Everybody had a reason for what happened with Robinhood.
Right.
But really, what it was they had perfected, the idea of everybody pushing the same buy button at the same time, to the point where everybody pushed the buy button at the same time with leverage.
Yeah.
Guess what happens? In a pinball machine, if you did that, it would tilt and the machine would go dead and the ball would go and you would lose. Right. And in the market, they got a call in the middle of the night saying you could margin call. I assume. I don't know the full story, but it was very fragile. And I think to their credit, now it seems like they, like you were smart to think they were undervalued. I always believed they didn't do enough with their stock price, being at $40, $50 for months to acquire. I always felt like there was not enough corp dev in the world. People started believing their own stories.
Right. When they fell to $8, you were like, these guys are kind of dead, just given they had an opportunity and they did. They weren't literally dead, but
Here's what I got wrong. Because I sold at 20 and when I could, right, for the most part. But I'm like, I want to be loyal. I like, so it really hurt that to see it get abused the way it was. I think the biggest mistake they made at PR wise that weekend was going on Davey Barstool's. They would have been better off going on anybody's podcast, but who in their right mind would go into that, hate-filled, place to try and tell your story in the worst PR disaster. So they bungled up as little as they don't think they bungled it. As a shareholder, that was frightening to see how they were dealing with the PR. So I had that overhang mentally. And then all my LPs were like, a win becomes a headache, put it that way. It was just a fantastic win. So I had very negative feelings about how the board was handling things. And I was happy to be out of it. And at the same time, I felt like they were just underutilized to the point where I met Sam Bankman in Bermuda. I went to him and I said, dude, like, I didn't know that Sam was good or bad guy. I just knew, why don't you buy the stock at $11? I remember telling him, I'm like, just go buy the company. Like the stock's undervalued. You
convinced them to take a 7%.
I didn't convince them. I'm just saying, I had a minute with Sam and I'm like, Sam, like we're talking about strategy. Why don't you just buy Robinhood at $11? What are you worried about anything if you got all the cash? And a couple of days later, I find out he did buy a lot of Robinhood, not because of me, I don't know, but like it was that weekend. And what a great purchase that was by Sam. It did go to an 8, but Sam is criminal of whatever his mind is. He wasn't stupid.
Yeah.
Right.
Yeah.
And I wasn't. You're not stupid. I'm not stupid. It was cheap. Now, but they weren't. It didn't feel like they were executing and understood what they had. Correct. Now, the good news is, let's flash forward. Right. It's today. The stock is breaking out. The stock's $20. They have a really strong cash position. What I couldn't have predicted. This is now public markets versus private. But this is angel hat off, momentum, public market investor off. Yeah, sell at 10, buy at 20. Okay, I don't know. I'm wrong all the time, right? But at 20, here's what we know. We know rates are in their favor. They're printing money there. We also know that there can be no competition, meaning the doors have closed. So I can't explain why, but there's people that think they're competitors, God bless, but there are no competitors, okay? And that's crazy after ZERP, that there's not 6 Robinhoods, okay? Yeah. There's just one. I can't explain it. Shame on the VCs, shame on entrepreneurs, but the door is closed. You're not going to be able to go raise billions of dollars to take on Robinhood. So it's theirs to lose. So my opinion on Robinhood is they both are the most undervalued of Web 2 businesses, but potentially the most overvalued, and a lot will come down to how they execute. So I'm very interested in, like, when you had the Vlad podcast, because I don't talk to him, is to listen and see how they're thinking. I still would be I would take 300-400 million of that 6 billion, again, corp dev Twitter hat on, and sprinkle it on the community of FinTwit. And instead of like investing in Sherwood and starting a media company, why don't they have 1,000 Finfluencers working for them, right? So I still feel like their strategy is very much too conservative for the cash that they have. And I think Coinbase has been a much more swashbuckling towards the SEC and culture. So that's paid off. Robinhood's up 100% from the lows,
Coinbase
150%. You know what I mean? Like, so there is something to performance based on some of their strategy. But going forward, how do who's going to compete with them? So it's a pretty exciting time for Robinhood if they execute.
The gold 1% deposit match, credit card. I didn't expect any of that stuff. Do you think that's another way they're thinking of deepening their moat as well?
Yeah, for me, I would have invested way more rapidly in desktop and lean back investing and media. Attention.
Yeah.
I don't want to read a Sherwood article. I definitely would listen to great. You know what I'm saying? So I definitely don't have the same vision as they have.
Yeah.
But that doesn't matter. I'm not involved in the company. I'm just a shareholder now. But I don't care for those type of products. I think they're important and the stock's doing well, but compared to Coinbase, no. Right? Like, could they own the FinTwit universe? Yes.
Right.
And I feel that's a big miss. But those are the reasons that I'm not on board. And it's fun to have an opinion without. I can change my mind, sell the stock. Who cares?
Right.
That's what's cool about public markets.
Do you use Robinhood as a brokerage or?
I don't. That's another thing that bothers me is I do have an account. But again, the fact that I don't have all my accounts there and my trust and like, I feel like while they went into China and UK, and I think these will all work out because the world saved, or the economy is kind of helping them at this point because you can't compete.
Right.
But I feel if we look back at a lot of those Web 2 companies, like, why did you go to China and waste a year, right? Like, it's so easy in hindsight, but like, they should have been building more tools for guys like me. I believe you go up wallet. They've stayed down here. So it's hard for me to be on the app when I need Morgan Stanley and RBC for the things that I need, right? So I think they'll get there. But right now, in terms of wallet share, I'm not their customer.
How do you philosophically think about cryptocurrencies?
Philosophically, I get it. Like, as a Jewish person, you go watch a Holocaust movie, or if your family's been in a war and had to move, philosophically, like the person who whispered Bitcoin in my ear the first time, Yoni Eddie Toro in 2011, it made sense in an Israeli kind of understands this because of the fragility of borders, and those that read the white paper, who are smart, got it. Fred Wilson, the people that have been right, like Chris Dixon, Fred Wilson, Yoni. So I continue to be bullish because those are three good people that have been right a lot, and if they're not changing their opinion, why should I?
Did you buy Bitcoin early?
I own some, but I definitely do not own what I should own. And I probably would have been suicidal a few times because I'm sure my Bitcoin would have been at Mount Gox. And it might have worked out, but I'm just not, as it comes to like money in the United States, I'm just very lucky to live in the US, and PayPal, and not PayPal, but not Square, but Venmo and even Wells Fargo kind of work for what you need, and Zelle. So crypto is foreign to me in that I keep enough of it that it still stresses me out. But I let other people, that's one area where I pay the 2% and let other people have the stress. So there's certain areas that I've learned to just pay the fees and let other people who do it 24/7 deal with it. Don't be so cheap. Like, you can't really index crypto. Pay for people that are working 24/7, and pay the 2%.
Do you think crypto is a catalyst for Stocktwits as well? I mean, so many people come to find updates on.
Yeah, I think it is. Again, as I'm not native, we're going to hire a few people. We have open recs, but I'm very bullish on meme coins, not because of why everybody else thinks, but I really am bullish on the hilarity and the potential fundamental value in the right hands of structuring these things to create scarcity and rewards. Again, the fact that you can create one so quickly and track it is cool. Like, yes, it will be used for nefarious things. I get it, but I'm not nefarious. So I'm optimistic that Stocktwits could have a meme coin that for the top 50,000 people on Stocktwits, there could be benefits to having the most of those coins, right? And not to pump it so it's worth a lot. It just should have value in an elegant way within a centralized community. So I don't believe in decentralized as much as everybody else, but I believe in non-nefarious actors of centralized companies like myself that really are trying to figure this stuff out and combine decentralized with centralized.
Well, the memification, the memification of these coins is like an art in and of itself. I mean, there's a coin called Dog with Hat. I don't know if you know about this one. 100,000 market cap, now 3 billion. I have friends who put in money when it was really cheap and they're on life-changing amounts of money and they're still not selling because to them, they're like, well, this meme has a long way to go, you know?
And so this goes to me paying the 2%. So I'm in Dog with Coin because I've paid other people that are doing this 24/7 and I'll call them and go, did you sell? And they'll go, no. And I'm like, oh, I'm just want to, but it's not me running the fund, right? If it was me, I would have flipped out of it, when it doubled. So what do I know? So there's still, so really the dumb behavior is in all these pontificators who weren't right about Web 1, who weren't right about Web 2, who weren't right about Web 3, aren't going to be right about meme coins because they're not getting their hands dirty. I'm, for the risk of being embarrassed, I'm going to take a certain amount of my capital, take it out of Vanguard, which I pay 0 for, take a little more risk, pay the 2% and go. Hopefully you return capital. But I can't learn all these things, right? But I can apply Dog with Hat to a Stocktwits coin potentially that would do the right thing for our community and inspire people to own it.
How rich are you, Howard? Like, do you have
I'm so rich. I'm so rich. All these teeth are fake. I'm so rich that every tooth is fake. The only thing I can't fix is my nose and my mole. So
oh my God, your nose looks great. I love. But do you have fuck you money to the point where you're like, you don't really need to worry about anything in life anymore? You're set.
It's not a good question because there's no such thing as fuck you money. Because if you're saying fuck you, you're in the wrong headspace, right? So I just think money is.
But I mean, if you can allocate to Dog with Hat and not worry about your net worth, that's kind of.
I'm not allocating to Dog with Hat. I'm allocating 10% of my portfolio to crypto. It's probably started out much less, and I'm calling the managers once in a while to see what's new, and learning about these things and just shaking my head. Right? We did a movie that made it to Tribeca called. This is not financial advice. I was an executive producer. It was fantastic. No one watched it. People don't watch good content that teaches you about the market. They just want to play. But so I think people are looking at it wrong, right? It is definitely an asset class. It's definitely a fly on the butt of the market, meaning it's a joke, right? GameStop, a joke. Trump tokens, a joke. It's tiny. It's like not relevant, right? But Bitcoin makes sense to me because if you got to move, there's something interesting to not taking your candelabra and all your silver and your paintings and your Peloton and if you have to move because the government forces you to move, there is something interesting about that.
Right.
But I hope I never have to really understand why, obviously. So it's a hedge against me hoping that I don't have to use it.
Is there any material things you've bought over the past decade that someone with your net worth could do? Like a car, a Lambo, a jet? Or do you not care about that? You care about investing more?
I care about, I'm 60, so I'm almost 60. So I tell people now, the trick is I tell people I'm 65. So they immediately say, oh, you look good. If I tell people I'm 58, they just look at me like, ugh. So that's a trick. But I'm in what you call generativity phase, I think, where it's just mentoring. Paying it forward is just so much more valuable than fuck you money.
Yeah.
Because there's hundreds of companies that these kids could work for. We have 100 portfolio companies that we can launch careers at. Our job is more recruiting and getting these young people started. So there's nothing more satisfying than taking one of my kids' friends that are smart and helping them get placed. You won't get a better reward in your life than helping a college graduate or someone struggling and change career, helping them get a career. I can't explain it. Obviously, there's charity that is important and other things. I'm not into it as much as just my network and like helping people launch. So it's fun. Like that's what I find, helpful. The things that matter to me is where you live. Right. So I always chase the sun. So we have a home in Phoenix and we have a home in Coronado. I don't think those are like top of the food chain. So when people say fuck you money, I'm like, what does that mean? Right? Like, could I live a better life with Elon Musk's money versus my money? I guess. Private plane. But that's maybe about it.
Yeah.
Like he doesn't seem any happier.
He doesn't at all.
Than me. And I shouldn't just use him as an example, Jeff Bezos. I don't see the number. So I think if people chase that title versus doing something they love or can truly become an expert at. So the faster you can get to the generativity stage, which is usually around late 50s, 60s, the better. If you can do that in your 30s, then you're gonna be another Bill Gates, I guess. But the thing about getting here took me to almost 60 to get here is I appreciate the journey more. So it's more fun being back as Stocktwits CEO. I can appreciate all the stupid mistakes that we made. I can appreciate all the mistakes that Robinhood made. I have a little more respect for the process. When you get it in your 20s, I mean, what are the odds that you're going to be a good person? It's very hard.
Well, you don't strike me as someone when you were 30 or 40 and you got a $10 million exit that you went and bought a Lambo. Like, you don't.
I did.
You did have that phase. Yeah,
I know Lambo. I thought like a BMW was cool for me, but I had kids. So, but it was a different era when I first spent my first big check. When I sold my first company in I don't know, $100,000 in my pocket, I bought a M3, and it was so dumb. Like when you really think about it. And it was at a time me and my partner would play practical jokes on each other. So that M3 was going to be destroyed within like 6 weeks because of the practical jokes we played on each other. It's a thing that doesn't exist anymore, unfortunately, is like kids they're always attached to their phone and they can't keep a secret and no one's planning, there's nobody planning elaborate schemes to mess with your head. Everything's like outing each other very quickly. So I think we're losing a lot of like the joy of even having a little bit of money.
Right.
But anyways, I think it's a process and a journey. And I think people should just be focused on living within their means. And that makes it does not change the fact that having some money helps.
Elon Musk, speaking of him and his wealth, he buys Twitter, $44 billion. I personally think he's made the platform better, opened up a little bit more free speech, started paying creators, more product innovations we've seen in a decade. You've seen the whole Twitter story play out since the beginning. Do you think it was the right move for him to buy Twitter?
Nah, he tried to get out of it. So I would say no. I mean, unless he's, no, 44 billion is overpaying. Does that matter to him? No. So again, like if is it Twitter better or worse? I don't know.
Well, what do you think? Do you think it's better or worse?
Not better for me. I'm shadow banned, or I have to pay for I have to learn a new system. So I became the idiot. They always warned Fred Wilson. They always warned you are the product. If it's free, you are the product. Well, here I am. I've been telling people, Josh Brown, people that were on FinTwit that went to YouTube early, are way better off than if they'd stayed on Twitter. Right. Yeah. So FinTwit is down 90% in terms of value, in my opinion, which is great for Stocktwits. Okay. That is neither here nor there. For me, it sucks. But for millions of other people, it's better. So again, like it's neither here nor there. But I'm very grateful that I've used email and use all the platforms. But the odds of me learning a new platform other than email at this point is like, I'm done. I'm too old.
Right. Tesla as a stock itself. Have you ever been bullish on Tesla, the company?
Yeah, I remember writing about it when it was in the 40s, like 08 or 2010. But I'm not an owner of it. And if I'm not the owner of the product, it's hard for me to really get behind it. Same thing with NVIDIA. I don't see it and use it, so I own it in the index. But people ask me about NVIDIA. I'm like, what? My take is going to matter. I've never seen one live. I've never been a foot away from one to feel the heat or the magic of it. So it just, people throwing around the term compute and GPU, and I'm like, okay, good, God bless. Like, I'll index that. Yeah.
How much time do you spend during the day looking at the public markets versus meeting with founders and trying to get a private deal?
It just depends. Public markets is habit. So I wake up I think anybody who invests should have a routine. The best investors have a routine. That's why I journal, right? Like, even if you're not being an Finfluencer, Stocktwits or whatever you're using to journal is just a great way to just track your ideas and how you're thinking and your mood. But it just goes back and forth. I'm addicted to the markets just because I've been doing it so long. And then I haven't been addicted to the private markets because founders, the prices that social leverage is willing to pay has been so far away from what.
So you think yields are still overpriced in the private markets? You still think
we've been very active the last 6 months, so it's hard to say. But from 2019 to recently, the math didn't make sense for us, right? Yeah. So, like I said, Robinhood. So a quick tip on how we see seed investing, only from our own returns, right? So this is just switching to private markets and public markets. Simple math, right? Like, if I go through all our winners in our portfolio over time, this is Golf Now, Wallstrip, Ticketfly, TubeMogul, Buddy Media, AngelList, Robinhood, eToro. Robinhood was 8 million valuation when we did it, right? Yes, at 60 million, that was a good investment, but they already had a waiting list of 1 million people, and they had already had FINRA and they deserved to be at that valuation, not the stuff that I see today. Yeah. Okay, they were and everybody was leaning the wrong way as well. So if our LPs, if we can't mark up a seed investment to an A investment 5 to 8 times, I don't see how we can get the returns that we're used to getting. That's from our own history of all our wins. They come down to a few checks, and they're always the ones that really move between the seed and the A, not the A and the B, the seed and the A. Okay. So if I'm writing checks at 20 million pre or 25 pre or 30 pre, that company has to get to 150 million at the next round. Right? For me to get fund return. I don't know why people aren't doing this math. How many of those companies are there? Right? So granted, founders are allowed to do what they want and venture investors are allowed to do what they want, but I have to have some discipline. And so the public markets for the last 5 years have been way more interesting to me than the private markets. Now, when that pivots back where I can make 5 times, so I got to be in between 5 and 10 million and invest in real good products for me to truly return, in my opinion, LP's money. So based on 15, 20 years of me writing checks, that's the math that I do. Unless, of course, unicorns are going to last forever. But in a universe where ZERP is gone, cost of customer acquisition is high, government is crazy, the world is fragmenting, right? And how are prices staying where they're at? I'm better off being in the public markets where I have liquidity versus locking up my money for 10 years and working for free. So that's what I think. I think a lot of people are just decided to work for free, and that's just stupid.
Right.
And so we've got to get back to a point where it makes sense for seed investors to take risk. Right. And so I don't know. I think we're getting there on some stuff, but then, there seems to be still so much capital chasing deals.
Right. Okay, 2 questions left for you, Howard. I think this one's going to be an interesting one that I want to see where you take it from. So Israel and Hamas has been quite a phenomenon over the past year since October 7th. Many companies have been a bit hesitant to speak out on what's going on. Palantir, one of the companies that I cover a lot, I've invested in. A lot of people on my channel like that company. Alex Karp, CEO, explicitly said we are on the side of Israel. They bought, full page ad in the New York Times saying we support Israel. How do you feel about corporate development in these big corporations speaking up about Black Lives Matter, trans lives, all this stuff, but relatively silent on the Israel situation? And how do you kind of feel about the college youth of today that are going to be the future business leaders, almost saying they're on the side of Hamas? I mean, how do you intertwine investing, companies and their perspectives on this, and then the youth of today dealing with these social issues?
Well, I think the percentages are still small. So everybody who follows me knows I'm outspoken, right? There was a ceasefire, at least my opinion of what a ceasefire is in most normal people. And on October 7th, that ceasefire was broken. Go listen to Sam Harris, go listen to anybody who's been following Islam and terrorism for a long time. And this is their moment. If you're trying to find new experts, go to the old experts that were talking about this in 99 and 2000. So I'm in line with anybody who's studied this. If people think life begins after death, I'm not for that. So these are terrorists. Seems pretty obvious, seems pretty black and white to me. If young people, in my opinion, are siding with terrorism, because that's all this is about, in my opinion, not some people say make it anti-Semitism, anti-Zionism. This is just stupid behavior by stupid anti-American people, in my opinion. Even as a Jew and as someone who's been to Israel, let's just boil it down to what are they asking for? Because really what they're asking for is for America to just open their doors to Islam, because that's what they're at. That's what they're telling you they want after Israel. So I look at Israel like it's Miami. If we lose Israel, like it speeds up the demise of what we're going to be dealing with here, which is these people saying life gets better after you kill Americans and Israelis and Jews. So I'm not bullish on that type of behavior. The good news is these people are putting up their hand and telling you what they think. And if these people don't think that CEOs like me are curating for people like that, if people are behaving like that on a college campus, granted, they have a mask on. We don't know who a lot of them are. And there's tons of products now being built to filter for those people. You've just given me the absolute first filter for hiring, which is what were these people thinking from October 7th to today's hiring date across their social networks? And if you are a sympathizer of Hamas, you are not welcome to work at my company. Okay. I don't know if call me a racist. I've let my team know when I came back. That's how we think. That's how I think. Now, if you don't like me, you should quit. But from the CEO down, that's how I think. Right. And I don't want troublemakers on campus in the Slack room, because if they're just troublemakers and they're not thinking, they're stupid. And so I'm very anti-stupid. And their argument does not ring true to me, because their argument of defunding Israel or wanting the end of Israel is really just means next up America. Yeah. Because so that's where I leave it. I know there's a nuance between that and what some of the pro-Palestinian people think, but there was a ceasefire. The ceasefire was broken. It was murder and terrorism, and this is a war. I mean, it's not good. It is not good to see young babies dying in Palestine. But I don't know how I'm supposed to think about it other than this is a war.
Do you think more companies should speak out explicitly about this?
No, I don't think companies should speak out. I think people should speak out. I'm really pissed at a lot of CEOs for not speaking up, but they don't, whatever. By not speaking out, they're also saying, but I don't think a company should take a stance on any of this stuff. Right. I think any company that does this doesn't have a good CEO. Like the CEO should say it. I don't think the company needs to speak. Right. But by the CEO saying stupid things, the company is speaking at many levels.
Right. Yep. All right. Last question for you, Howard. Thank you so much for your time. This has been absolutely awesome and legendary. We got so many comments here saying they love that you made an appearance on the channel. So it means so much. Give us some alpha over the next 5-10 years. What stocks should we look at? What trends should we look at as retail investors?
That's a great question. So the smart people that I am talking on, cycles last longer. We're in this higher interest rate environment. We're at shrinking borders where everybody's looking internally. Tariffs are coming. Trump started it. He's probably going to be back. I don't know. But in a world where all that's happening, the commodities make sense, right? No, nothing could be more boring to me than saying that out loud, because it's a supply demand. It's not really growth. It's esoteric in terms of how you trade them. It's not something that I understand, and I don't want to learn new things. But I think a lot of money will be made thinking differently about growth. Right? There's growth is going to show itself in many different ways. When you can't buy endless growth by arbing Facebook ads, you have to look elsewhere.
Right.
So growth will look different. The capital market. I've been long the 3Gs for a while, which is gold, Goldman, and Google, which is my replace. So I've been talking about the 3Gs over the 3Qs, right? I think you can own the 3Qs, which is the triple Qs, but there's no gold in there and there's no Goldman in there. And as much as I hate or don't need either in my life, Goldman, for all the hate and all the much as the world we hate Goldman, they're stronger than ever. If China's buying gold, who are they calling? Goldman. If US is buying gold back from China, who are they calling? Goldman. They're not calling Robinhood. You can't even buy 100 shares on Schwab or Robinhood without moving the market, right?
Yeah.
So Goldman has never been more, for all the mistakes they've made and for as much as evil as they are, they've never been in a better position. Same with JP Morgan, right? They're too big to fail. And then gold is a representative of, many ways what Bitcoin is. And
that all-time highs now.
Yeah, all-time highs. And then Google, right? Everybody, I still believe the app layer is Apple, and Amazon and Facebook and Microsoft and Google. And Google will figure it out. So those are like three. That's how I'm representing, myself. And then this degenerate economy, right? And when I have this ETF that I created, but it doesn't just have like DraftKings in it and Coinbase and Bitcoin. It has CBOE, it has a CME in it, it has LVMH in it. Right. It's just we live in this market where you got the speculators and you have the super rich. I think the middle, right, is very hard, right? Like the Walmart and the Targets and the Costco's of the world. There's winners, but I think you have to be in the high margin luxury end of the business and in the speculative degenerate entertainment side of the world, media. So I'm very bullish on those two ends of the spectrum.
And you think tech over the next decade still wins?
I just QQQ. Again, I don't overthink it in a world where these companies are so big.
Yeah.
I don't believe, I'm sure there's people that have done it because I've talked to them, but I don't believe you could have predicted NVIDIA would go from 84th to 3rd. I'm saying, so the easiest way to predict that is to own the QQQ.
Yeah.
Right. So I just don't have a better idea for that. So I think any strategy should begin with like being mostly invested through an index and then adjusting leverage around that idea. That way you're invested and you can apply subtle changes to try and beat the market. That's kind of how I attack it.
I love it. Gold, Goldman, and Google. Awesome.
Yeah, the 3Gs. The 3Gs.
3Gs. That's the first time I heard that before. I love it. That's great.
Yeah, it's been about 6 months that I've been talking about it.
Howard.
Trends with Friends is the name of our podcast that talks about stuff like this.
Yes, and I'll put that in the description as well, guys. Trends with Friends. That's how I actually met Howard with his co-host on there. So you are making media every day. You're still. Well,
I'm having fun. So talking to my so the way you do it, it's homework, right? So the way I'm doing Trends with Friends is how do I talk to the smartest people I know about the things that interest me instead of me making content for traffic, I'm making content as homework for me. So if I can it's never going to be viral and it's never going to be watched by millions, but there's alpha in Trends with Friends. Why? Because I talked to two of my favorite opinionated investors on behavioral and charts. So the idea that we all think differently and they're all people that I trust and I can talk to them at the same time every week for an hour is like therapy. Yeah. And I think that's what people should be doing. But instead, they're focused on click. Everybody wants to be the next All In podcast.
Yeah.
If you really listen to the All In podcast, and I have, in the past, there's no alpha. Yeah. So why are people listening? Like I can't understand why people would listen to a podcast that isn't insanely funny, like, or silly, like Conan O'Brien or a comedy podcast, or insanely full of alpha, which means you're going to have to find that. You're not going to it's not going to be the most popular podcasts that deliver alpha.
But then the alpha's gone if it's the most popular podcast. Yeah.
Or they don't care about alpha.
Yeah.
They care about clicks.
Yeah.
And if you care about clicks, there's literally no alpha.
Yeah.
Like All In had Sam Altman on their podcast last week. This week he's committed 12 crimes. Like, so what? Are they going to have him back to talk about the 12 crimes this week? Right? Like, they're whitewashing criminals, right? So focus your investing time on people that deliver alpha, not people that deliver news and opinions. And you will be much happier and a better investor. All right, I'm leaving it at that.
Howard, thank you so much. Means the world to me. Thank you guys for listening and watching. We'll see you on the next one.
Keep doing it, man.
Thank you, Howard. Means the world. Bye, everyone. Have a good Sunday.